Hey everyone, good evening. It's Jason Jenkins, CEO, founder, Jenkins Risk Management. It's the 27th. This is Thursday. I'm doing an update on crypto, or what we call our CryptoEdge product. This is for the institutional guys, but I'm giving people a free look at it. I can maybe talk a little bit about what the offer is at the end, and I'll post it for the Cycle Edge letter subscribers as well. So this is an update I've been wanting to do. Some of you guys that are in the chat know that I've been working on this. A lot of cycle work. I'm going to go through it the best I can in a slide format, and then I'll go over some of the futures price charts. And again, this is a directional model, so we're looking at price, but specifically this report, I try to highlight some of the cycle turning points. So coming up here on the 31st, a lot of times these weekly 8.6 cycles will follow. Sometimes it's 8 weeks, 9 weeks, but kind of what I've been targeting is over the weekend into Monday. I think there's some pretty pivotal stuff. So we'll get into it. I'll give some backdrop. I did some other analysis too. I'll be attaching this PDF, and then you guys can read through some of the other charts. I won't go through every single one. Okay, so this is the body that I did as far as the cyclical analysis, and I'm going to go back and forth between some of these. But so if you haven't followed me or you're new to my work, we follow several different cycles, but the 8.6 frequency is a big one, and I've been charting crypto, specifically Bitcoin, lots of alts, and just different coins and tokens and price movement. But the key, a lot of times what shows up, and you can go back and do this on the 5, 6, 7 years, but the monthly and the weekly do a really good job. So this orange line is the monthly, my 8.6 cycle, and then I overlaid the weekly. You can get down to the daily, which I did, but I think I have that off just so there's not as much noise. But just to do a little bit of teaching on that. So again, this is the longer term wave. You can see it did a very good job of picking the high into the spring last year. Okay, and again, these are turning points. So the cycle doesn't mark high and lows in price. A lot of times you'll get highs with price. Like this was exactly what the weekly in the vicinity of the turning point year. But nothing's perfect. And then a lot of time you'll have cycle inversion. So what we're doing is we're measuring time. So there are points where you'll be high on the cycle and you'll get a low in price. For here, for example, high as far as price on the chart, but the cycle is low. That's called cycle inversion. So what we're measuring is a rhythm of time, calculating, there's pi, 2 pi, cosines, in the sine wave, things oscillate. 2 pi is in the formula, but all those constants are very well known when it comes to geometry and space. But there's also a underlying structure to time itself. So that's where these waves come in. That's where these cyclical turning points. So it's not so much about, for example, this is a high here. We're not saying that price is going to rally to that point. This is I want you to think about in turning points and dates. That's why you draw the vertical line. So you could get a low with the turn. You could get you could bounce here and then rally and make a high here with the turning point. So don't look at the sine wave as, again, highs and lows on the chart. We're trying to measure time on the y-axis. All right, so I'm gonna flip back and forth, but this is the weekly cycle that we're coming into here, end of January, I just talked about. And then notice that here again, the cycle did a really good job of the highs into the spring. Okay, basically had a half cycle. You go halfway down the orange line, that was your low, right in line with the cycle inversion on the weekly. So this is what we use. When you get a high here, you start breaking trend, it's a higher probability that you're going to get a full cycle down. So we were looking for a low down here, pretty much, you got them, you stopped going down. And the breakout didn't come a little bit later till actually a half cycle, probably 4 or 5 weeks off the highs is when we bottomed. But that's when you go to the weekly, and that did a good job. So you rally with the weekly cycle, full cycle all the way back in time. Boom, there's your high. Market made a new high halfway through that weekly cycle. And again, we had major tops all in this area in this time frame in November, which was May, June, July, August, September, October, November, 7, 8 months later. Okay, so I touched on that. I write up that a little bit later, a few slides from here. So the last major high was pretty good, marking this turn. So the question now becomes, we're about the same thing. We're about halfway up the longer term cycle, coming into a weekly turning point. So we're watching, again, the end of this week, the weekend, into next week. And if we get a turning point, a couple things can play out. We could put a low in here and go sideways. For example, go sideways until the next turning point, and then maybe you break out. But what I'm watching for is after this time frame, whether or not we fail to make lower lows, but then if we can actually start to change the trend and start making some higher highs. So I have overlaid the pi cycles. I won't really get into that, but you can see how everything was bullish. It's just the same thing as looking at the intermediate term trend. You break, you roll, everything's bearish. So until this turns back up after the cycle, if it can turn up and make a new highs, then you could expect a rally into March. If we can't make new highs and we stay in this intermediate term downtrend, we want to watch the lows and then whether or not we just base. So I'm looking for lower lows for a final drop, maybe even to these lows down here into March before we bottom out and or break out, or we could base in here and break out with the cycle. So that's kind of what I'm looking for. Then depending on when the market turns back up, that'll kind of help with the timing as to, okay, when could we expect, you know, a lower high relative to these old highs. So, you know, that we could bounce here, take off next week, right? And then maybe rally into this turning point in March, make a lower high, and then be back into this kind of longer term chop. But those are the time series that matter. And again, this has done a really good job. I mean, it pegs lows like you wouldn't believe. I've been following these cycles for a long time. They work really good. This was kind of a mid-cycle slowdown here. And then we dropped into this low, looks like, right? So really important weekend. That's why I'm doing this report, getting it out here before the weekend, this weekend and next week. Next week shows up in other models too, like the S&P. We have a pretty high correlation to BTC and this risk off growth slowing move, i.e. watching equities, US equities. So we'll see. I think your big turning point though is probably May. So we're gonna have a year of probably not new highs. The question is, how deep do we get? I mean, we've already had pretty much a 50% correction. So we're getting close to a bottom. But for me, in doing this a while, I mean, we're only halfway back up the cycle. I don't think you're going to get any type of major move till May. This is more like, are we going to bottom on this cycle? Or are we going to bottom on this cycle? And then maybe we start to break out on this turning point or this turning point. If we reverse hard, there's a higher probability that we rally into this this wave in May. If we chop and the growth stays slow, which in our models following some of the fundamental guys that we do cycle work with, it's going to be very difficult for the US economy, real GDP, to get past March and April, because the comps from last year is almost 100% probability that growth is going to slow March and April. Whether or not the market front runs that, but equities are going to probably struggle just like they have to the start of this whole year. So to get that situation, I mean, Bitcoin has struggled when we get that type of growth slowing, everything else is down, kind of deflationary move. So until maybe that plays out into March, again, maybe we bottom in March and turn around, break out into May. But it's probably going to be tough to get back to new highs before May. So anyway, that's how we look at those two main cycles, the monthly and the weekly. Okay, I'll come back to this. I just wanted to do one more. Well, I'll just highlight, here's the pi cycle. So this was all areas to be long. This is where we're trading around this uptrend. All right. And then everything starts to change. These are all lower highs to sell, start to get bearish. This was kind of the last chance for the market to hold. If you guys remember, 40, it was 53 was a big level, and then it was like, all right, maybe we flushed down to pi, which was down in here. And then again, nothing but lower highs. So the market is still in this bearish trend, intermediate term down move, and everything's pretty oversold. But again, we want to watch this January. You know, the first sign is going to be stop making lower lows, and then whether or not we can actually start putting in some higher highs. So still, we've been bearish to cautious. We've not been buying the market. We've been basically making the call since we were out. I'll show you on the trend, but when we were breaking these levels in here and pi started to cycle back to the top, that was the call that we were going to get the deeper move to 40 and or like we talked about, maybe even back to 32,000, which we got pretty much close to it this week, maybe 30. We're going to watch those, was it the summer lows? Okay, just one more example of this cyclical work and how kind of accurate it is. So here's the orange again, is the monthly. Last big major move we had, we played a nice full 8.6 month rally. This was like, we came through 4,000. And when we went to 12 or 13, that was a huge move. We peaked pretty much right on schedule. And then put the low in on the half cycle with this weekly right in here. I had another bounce to a lower high, but basically we didn't bottom out until this side of this cycle. From the high, full 8.6 9-month cycle. Right here on the downside of this wave is when we actually bottomed. Again with the weekly, notice that, like to the T. And then from here, guys, on the downside of this cycle was another rally, 4,000 to 12. All right. So we tripled in that rally. I had to deal with this base. And then again, as we start to work up on this side of the cycle is when we finally had the breakout above this prior high. And then again, look, we had the rally all the way into another 8.6 month cycle with the weekly kind of pivot about halfway. So see, you can see that there's a structure to this. And this is why we use the cycles. I mean, this is a great place to be taking profits, which we were. You did some work and then, you know, put in another, like even here was a pretty good high with this turning point. But this was the bulk of the move. Boom, all the way into this. And that was the end of that. And again, back to kind of what we've been dealing with, this $60,000 to $30,000 range. So pretty amazing. And that same ebb and flow and rhythm goes back even prior to what year is that? The 2019 rally. All right, moving along. All right, so here I explained some of the numbers and levels, but it's just basically me in writing talking about what I just went through. Again, there's some of the pi cycles. Those are the dates. I just put them out there again after what I talked about. This is me again explaining what to think about going forward. It's the same stuff I just covered. All right, some other performance, which is interesting. So, people don't get it that when growth slows and you got a deflationary move, dollar breaks out, it's Bitcoin doesn't like it. So it's the big risk off move, tech gets hit, everything risk assets gets hit. So we're down 40% from the all-time high. I'm looking at this 3-month change. I mean, the relative performance versus S&P, gold, even gold is, BTC is off more than gold versus the dollar, down 40%. So this is just what happens when growth slows, guys. And that was our call into the end of last quarter, that it was going to be tough coming into December, January, that we got a high probability that markets roll over. And you can see it in other things like the Russell. I'll do a global macro update on the more traditional markets. But I thought this was interesting. Coin volume year over year, it's down pretty good. So it's probably a lot of guys puking in the lows. I have a couple other charts that look at some of the volumes, transactional data, and the closing out the short liquidations. And then USD volume, this is dollar up. So that's kind of what you'd expect to see when we get these risk off moves. So we got to continue to focus on equities and S&Ps. That's going to paint the way. Dollar, all that stuff we talk about in global macro is going to be what help determine when BTC can trade better. And if that stuff doesn't bottom out till March, April, that sets you up for Bitcoin not to really go anywhere till May, which lines up with what we just looked at. Okay, some of this stuff you got to kind of read into. But we do work on this, kind of just charting the patterns as far as volume. This is kind of what's interesting to me is, you got a lot of BTC changing hands and a lot of activity when we start to break out, and there's a lot of FOMO and a lot of chasing. But there was some divergence here. The spread really widens out, which kind of, I think, helps put in a higher low. You went from here all the way to a pretty good size retracement. You guys know our wall concepts. I mean, this is like a 618 retrace just on the volume, and then that kind of coincided with a low. So when I look at this move from here, guys, all the way from here to here, we haven't even retraced half of that. So to me, maybe there needs to be more capitulation, whether that's guys shorting into the lows, like they haven't hedged, they're just late, and now it's too much pain and they're selling the lows. I could pick this. I just want to see where this bottoms out. I mean, I think if it gets back to some of these deeper levels, that would be, if that coincided with the lows from the summer, I think that matters. So that's something I'm watching. Here, number of active addresses. So I thought this was interesting. Again, we had a big move down, kind of some nice trending. And then you basically double bottom at these same levels. I don't know what the level is on the number of active addresses. And then the market finally kind of stable, kind of base, and was able to just gather its energy for another run. So we kind of had a little consolidation there. But this to me is just, we've had a big, whether guys were taken here, I don't know. I studied this enough to know why that dropped, but to me, this looks like we still got to do some more work before we base to start making higher highs. But anyway, we can watch this. That would kind of maybe be a signal of more activity picking up. But to me, it just looks like there's more room to come back to these levels that like if we made lows in the summer here in price, we're kind of a long way from that. So we maybe need to see if that needs to come in more to help with our timing. ETF flow still seems strong. I don't know if that's just a fact that some of these ETFs are so new, so there's plenty of flow coming in. But I mean, we rallied with this type of action. I know that all these ETFs are new, so it's kind of hard to make a good solid pattern, but this is still bullish. I mean, you're at new highs versus here when the market was trading at higher levels. So I think if this were to accelerate, that might be a sign of, trouble, but that looks bullish. constructive. Same thing here with the assets under management for the ETFs, still strong, basically still on the highs. It'll be, as we have more data over a longer period of time, this will be interesting. Now, this is what I was talking about, the short liquidation. So typically when the market rallies, we get the spikes in the short liquidations. These guys sell the lows, it rallies, then they peak. But this is interesting is that, see again here, I mean, we're at all-time highs and you get these shorts are spiking. But here this has gone down and almost like not a lot of change in price, and this just plummeted. But then we just cratered and the short squeeze went through the roof. So I don't, to me, it makes it seem like guys sold here short in the hole. And a lot of times when you're at the end of a bear market or the end of a downtrend, it's the short squeeze that starts the uptrend. So that's a little bit different than all these other rallies. This was a puke into the lows with the spike and the short covering. So something to keep an eye on. And lastly, more, what do I have there? That's assets under management for the ETFs. Still bullish. Going backwards. Okay. And here's the same phenomenon, looks like in Ethereum. Right? Like this is a pretty good rally squeeze. And then it's the opposite again. We got to add this downtrend, rally with the spike, and now we just had the collapse this last week or two, and the shorts exploded. So maybe this is another good sign that that was the low, that divergence and what normally takes place. Keeping an eye on the future stuff. Again, the Bitcoin futures market's kind of such a baby. But the Z-score, without going into this, we kind of look for anything like 1.5 to 2 plus or minus, kind of shows you that the positioning is maybe getting a little bit skewed to one side. I don't really see anything sticking out here. This futures curve looks fine, but I guess to me, what was interesting, maybe this net long is still bearish. You guys are, this number is negative. So I don't know. That's the leverage fund. I don't. It's maybe if that were to flip, that's the only thing that's sticking out on the futures positioning. Wouldn't say anything major. Okay. Net futures position long for hedge funds, institutional net funds position. It just seems like the hedge funds maybe be a little bit faster playing it from the short side, and then this is the longer term money that's still just chock full wanting to be long, which is understandable. Maybe we keep an eye on these shorts building into the lows, though. That might, if we start to get down at these levels, that might be a sign that the bigger fast money is short in the hole. Maybe we can get a catalyst to finally get the short squeeze to put the bottom in. Stable coins are rising. You guys can go through and read this. I think that makes sense. It's pretty obvious. There's not a lot of instruments to short Bitcoin and crypto. So guys just kind of pile into the dollar, stable coins, and then hide out. That's what that's showing. You can read a little bit about that if you want in the slides. Long-term holders, largest percent of long-term holders have lost since May. Kind of expect to see that into the lows. So we're getting close to a bottom here, guys. It's just sometimes you got to be a little bit early. We got to let the cycles play out. Yeah, so the darker line is a percentage of the longer term. Yeah, so historically it's a sign of longer term. Lower highs, peak, and losses. Okay. This is some stuff going on. I did a little bit of work that was done on Ethereum, the burn flares. You guys can read about that. This is just some of the NFT daily traction or transactions between, you guys know, these Genie and Gem companies, but you can read a little bit about those transactions. Nothing kind of really sticks out to me. I wanted to just start to cover some of the NFT space. Okay, then this is some work I did on the spread. So Ethereum, whether you're looking at the network-based effects, the fundamentals, that's been growing faster than Bitcoin. But price rally, the chart has been more bullish, faster, bigger moves the last 18 months, 2 years. Kind of see that in the charts. And then that's the purple line is Ethereum. And so I kind of expect that to pick up. Now, sometimes because you have one that's moving a little bit more beta, Ethereum will drop, obviously bigger percentage or faster. But I like, the way we're playing it is I like being short or hedging bearish BTC or just waiting to buy, not getting long yet. Okay, this red line is showing some of the pi cycle work along with the trend data. So this is still bearish, both for Ethereum and Bitcoin. But Ethereum is getting back to levels. It's probably going to get back to these lows if we have one more leg down first. So I started nibbling here with the idea that I'm going to kind of work into these longs into these next 2 cycles. But that's how I'm playing. I like buying Ethereum first. It's retraced further. And then we'll see if we get another push down to maybe start nibbling on Bitcoin. But I don't want to do them both at once. I'd rather use the short side of BTC to determine the overall market and then just be a little bit patient on some of the longs. You can see some more here, guys, on, I just zoomed in. So this is a lot with trend work and the pi cycle. But this all started to rotate coming into November, December, and nothing's changed. We're just getting all lower highs. Any of these rallies are going to be met with selling. So until we get really above 4-hour pi line, this is all going to be met with guys that are long underwater. They're going to sell. So this isn't, you just don't have to be in a hurry when markets are basing and trying to turn the corner. We'll take our shots contrarian, but that's just, I mean, it's just obvious the amount of resistance above the market. And then I've always said this is a good short. Probably could have played this more this year, but Bitcoin Cash is a great one to, you know, if you're long, start shorting Bitcoin Cash against it. You can pair trade the 2 off of them. So, you know, you could be selling Bitcoin Cash in here while you're taking profits on some of your longs, putting out a little bit of a short, covering some of your short on Bitcoin Cash. Maybe you're still buying the dip in here, selling a little bit back out, Bitcoin Cash. If you can play that short, that's a good spread. And then, you know, when you get these big moves down, you can see like there's lots of rips to be shorting. So there you go. BTC is down 35%. Bitcoin Cash comes off more. That's a good way to play it. And I think that's pretty much all I want to hit on, guys. You can read this yourselves. I did a little bit more overall work, talked about some of the coins we added. Basically, the CryptoEdge portfolio is sitting only 30% invested on the long side right now, still firing off some shorts on the intermediate term, sitting in cash, stable coins, and then again, just trying to start slowly over several adds and several buys. We'll start getting into some of these names. So I just added some of the stuff that we were doing. But you guys can read that. 2 ways to get involved. This is CryptoEdge letter. It's weekly, monthly analysis, overall markets, crypto. And then the CryptoEdge Pro is where this is $3,000 a quarter, but right now, guys, I'm offering for the entire year. If you click this link, 90% off I did. So for the entire year, it's only $900, and you're going to get all the moves that we're doing intraday, core trades, swing trades. If we're trading Apple, if we're trading the VIX, if we're trading what I'm doing more frequently on Bitcoin and in and out on. This is all the intraday core stuff, the same way I cover my institutional guys. If you're an oil trader, what we're doing, it's all high level stuff. A lot of analysis, video updates, conference calls, Zoom calls. But yeah, that would be for somebody that really wants to make a living here, pull some serious money out of the markets. Or the psychological is fine. You can, for like a whole year, it's $180, $20 a month. But you just don't get the direct coverage. It's just a passive newsletter for the most part. All right. If you guys have any questions, you can always email us, sales@jenkinsrm.com. There's the website. Have a great rest of your week. It's only one more trading day, and then we'll see how crypto trades over the weekend into some of the cycle turns. Yeah, Monday and into next week.